The question that markets are attempting to price and answer now, though, is will it be 25 or will it be 50? What's your current thinking on where we stand right now?
Thanks, Dan. So look, the latest employment report was neither strong enough for us to price out the risk of a faster Fed cutting cycle, nor weak enough to, for the Fed to signal urgency to start with a 50 basis point cut, leaving, I guess, market pricing stuck between this executive 25 to 50 basis point cut scenarios. Now, big picture for us, Dan, is that it certainly appears that we're in this kind of controlled descent type of environment with recession risks over the next 12 months still below 50% and with most of the recent data still quite holding up. So yes, Friday's US jobs report fell modestly short of expectations, but it did show quite a strong rebound from the previous month. And so I think there is an argument to be made here that the front end as well as the medium term forward rates are rather too low for a non-recessionary outcome.
So that would mean 50?
Well, I mean, I think so. Our house view is for 50 basis points. Yes, indeed. I think they're going to go heavy this week. But I think, look, where market's pricing in, it makes total sense from what the Fed has communicated to the markets. Since Jackson Hole, since then we've had the payrolls jobs report. We've had a number of Fed speakers kind of giving that on the fence view. But I think if they do go 50, then certainly I think that's risk on for a lot of cross assets.
Okay, let's watch it closely. That also means we could potentially see markets sell down if there's a disappointment and we don't get that 50 basis point cut. So watch that space as well. But Ehsan, the reason I wanted to have you on today is because we also have to assess what this rate cut is going to mean for capital flows into the MENA and emerging markets, particularly in light of the current economic conditions in the region. What's your view on the translation effect? Once we see this Fed cut, what does it mean for MENA? What does it mean for EM? And is there anything that you're watching specifically?
Yeah, exactly. So since the start of the Fed easing cycle is, of course, certainly supportive for the EM asset complex, and we view that it will lead to a broadening out of the EM cutting cycle, which so far has been broadly led by the early cutters in Latin America and Central and Eastern Europe. But we expect central banks in South Africa, South Korea, Taiwan and Turkey to join that chorus and initiate their cutting cycles before year end and supporting the local rate curves in these jurisdictions as well. But on net, we would say that taking out some insurance against what potentially could be quite a volatile end of the year will be recommended for investors. Indeed, the hurdle rate to invest in EM space right now is rather high in our view, and global funding is rather scarce. But yes, EMs today do offer a compelling story, but we would still recommend focusing on the bottom-up micro against the top-down macro to instill confidence in where to play.